Good morning. Welcome to the Financial Pillars All About the Money podcast, presented by Our Neutral Voices Media. Our show is all about helping our audience understand money, mindsets, and tap into the economic knowledge that builds financially secure individuals, families, and communities. So whether you're tuning into our show to learn about budgeting, building credit, investing, or starting your own business, we're here to break down the knowledge in a real and relatable way. Before we kick off our show today, JJ, you want to bring us in with a little prayer?
Sure. Let us bow our heads. Lord, thank you for waking us up this morning and allowing us to opportunity of living our day to the fullest. Lord, please bless everyone on this panel and all our viewers, and that we can have the right words and knowledge, that we may have a nugget that somebody can take home and really need to listen and better their personal situation. We ask these blessings in your name. Amen.
Amen.
Thank you for that. So a few introductions today. I'm Ryan Leopard. I'm a private banker with Star Financial Bank.
I'm JJ Foster, Lake City Bank.
Mia Outlaw, Lake City Bank as well.
Yeah. Some of y'all maybe remember Mia. Mia's been on our show a few other times in the past year. We're missing our boys Terrence and Ben today, but Mia's going to do a great job for us. So welcome to the show. It's good to have you back.
Thank you.
Yeah. So JJ, topic, kind of your thing today. I'm going to kick it over to you.
All
What do you want
right.
to talk about?
Sure. Yeah. I mean, our economy today, everything that we do, we talk about all about the money. We're all in the banking world and retail, and you come across folks in real life situations and things. I think we talked a little bit off air. I was telling you, you put somebody into a home, and they're approved at a loan, as we said, at 42%. And they get the fixed rate that they want for their property, and that fixed rate stays the same for your mortgage payment. But in our economy right now, the thing that's hurting people are the taxes and insurance. They continue to go up, and then not even just with the taxes and insurance. We're talking about groceries and everything else around them going up. Gas prices, all these things have gone up. So from whenever somebody has been lent money, whether it's for the mortgage or, a home equity line of credit or a line of credit, whatever that case may be, all aspects have not stayed the same. Things have changed. And these are, like I said, questions, and I'm looking at folks. The struggle is real. And I just wanted to bring it to the panel and just kind of have a discussion and talk about, some of the stuff, some of these type of deals that are going on. If you guys had any suggestions, how are you handling your current situations? Things that we can help the audience out with.
Absolutely. Yeah. And to your point, when you mentioned the home buying and the mortgage process on there, we're already at a level where home prices are a lot higher than what they used to be,
Right.
10 years ago? Probably about 10 years ago. But now on that end, so you're getting a lesser value of a house to be able to afford. But on top of that, now you're bringing that down even more because you got higher insurance costs, higher property tax costs, all those things that have to be factored into it. Right?
Yeah.
So tougher for people to get into a house that they really want to be in, or their forever home.
Yeah, well, yeah, and that's a whole nother deal. But even with that, okay, we get you into that house, like you said, as tough as it is, we get you in there, and now everything continues to go up. Now, I know you said you're not a homeowner, but in those scenarios, you deal with finances. How, what would you tell somebody? How could they navigate through that particular scenario? And you also give out money.
Mm-hmm.
So, have you come across that? Have you seen this? You guys have done some loans with some people, and they've been struggling with payment.
Yeah, but I think too, you're seeing a lot of people tap into their home equities a lot sooner. Like I'm doing home equities on homes that have probably closed within like the year, just because of things increasing. Then we have to think about how you were saying, because the short time that I was also in real estate, we think about like the homes that are available. You're not getting a brand new home, and then you got to think about the things that come up when you get a home, like a new AC or an older home, all these things that are large expenses. So we get these people into a home, and then now they don't have a cushion for when more big expenses happen.
Yeah, that's a great point. I think I mentioned had to repair a central air unit last year, washer, new clothes washer and dryer, dishwasher, garage, had to replace a garage door, multiple things. And those things just always usually snowball. So it's hard if you're just keeping up with your payments to be able to set money aside. Luckily I was in a situation that I was able to do that, but not everybody is. So then you have to go with all this maintenance, repairs, and all the other stuff that you got to factor in. It makes it really tough. And to Mia's point, that's a great resource if you have the equity in your home, the ability to do that, is look at doing something like a home equity line of credit. But at the same time, also adding another debt to your your budget. Yeah. So
I was gonna
tough
say,
decisions.
tough decisions. And it also, I mean, it leads into, okay, home equity line, and we look at savings. And again, got retail folks over here. Savings, where can people get the biggest bang for their money? Some high interest yield opportunities for people. What kind of suggestions do you have? Because again, in this climate, people are struggling with, do I invest my money? Do I just have it in savings? What kind of rate of return am I getting? A question I kind of asked you too off air. I mean, people are looking at, as we get, some people are further down the line in their mortgages. Do I pay off my mortgage and use that extra money to invest, or do I continue to say I got in, at a 2.5 or 3%? Do I keep that mortgage and
look at doing like home equity line credit or something?
Correct.
Yeah.
So
let's answer that in a two-part question. I'll let Mia kind of jump in when it comes to like the savings rates. That you want to answer that portion of it?
Yeah. So I think in my expertise with the savings and whatnot, what I am seeing a lot of my customers do and what I am recommending is, if they have the funds are small, like a nice, medium-sized savings or whatever it is, to do a short-term CD. Those have been a lot of things that customers have been doing. You have your money market, your simple earnings checkings. I think it just depends on where they bank at, seeing what their money market rates look like, what their CD rates look like, just to get a little bit more interest on the money that you have sitting there. I mean, it may not be a ton of money that they're making from their interest, but to me, how we were saying, especially in this economy, anything is better than nothing. So I'm seeing a lot of customers do short-term CDs versus the money markets, because those fluctuate, versus putting it in like a 3-month CD at 3.40 or vice versa, different rates. And that's getting you a little bit more money to help you out in these times. Again, I think everybody is trying to get the most that they can right now in today's economy and everything that we have going on.
And so what is the highest rate to somebody? What's the highest yield somebody that from your retail side?
I think for a short term, going from like 3 to 6 months in just in an array of like financial institutions as a whole, I'm seeing like a 3.4 to 4% for like a short term CD, depending on where they're banking at and how much money they're putting into the CD.
Okay.
Yeah. So in that scenario, as long as what they're making, because it takes money to make money, right? Putting $15 in there is not going to get you rich off interest, or $100 or $1,000 and get you rich off interest. But ultimately, if you're able to keep up with inflation or beat inflation by a little bit, 4% would beat inflation, 3.5 might as well. It's depending on what the month it is. As long as you're doing that, it's still, your money is keeping its value. Right?
Exactly. And I think too, like with the CDs and whatnot, if you already have a savings account, like if you already have a savings account of, let's say, just a minimum of 500, because CD rate limitations have lowered a lot. If you already have a minimum 500 or something around that amount sitting in a savings account that's doing nothing, and yes, you might need the money soon, and that's why it's better to put it in a short-term CD, but at least you're maximizing what the savings that you do have, that you're trying to just keep as like a secure nest just in case something comes up.
Mm-hmm. Yeah. You want to address the mortgage?
Yeah, go ahead.
Mortgage question there. So let me reiterate the question, make sure I'm understanding. If you had extra money, should you pay your mortgage off? Should you keep the mortgage on there and invest the money? Is that kind of where you're going with that?
Correct. Yes, sir. Yeah.
So it all depends on, I think, where you're at financially wise, and I've dealt with people on different ends of this. Usually when you're with somebody, dealing with somebody that, may work a normal 9 to 5 job, right? They don't have a lot of savings put away. they don't know there's not a ton of money coming in. It's a safety net. If I have the extra money, my mortgage is paid off. Yes, I want to pay that off because that gets rid of a monthly debt for me. I have the feeling of my house is free and clear. That debt is relieved, right? But when you're dealing with somebody who has money, let's use doctors for example, right? They make a ton of money, but they spend a ton of money. But with them, they know the money is always coming in, and it's always large amounts of money coming in. So for them, having their house paid off and free and clear really isn't a relief, getting rid of that debt burden, because they know they got more money coming in. They have that safety security blanket, right? So to them, paying off their mortgage is action. This is the mindset of the wealthy, is that's dead money. Why am I going to go put $300,000 on my mortgage to pay it off, to own it free and clear? Because now I don't have that $300,000 to go invest or put into my business or buy other real estate, right? So there's different mindsets when it comes to that. So really the best way to answer would be depending on who you're talking to, right? If you don't know where the next paycheck's coming in, or you don't have a ton of money coming in, I would say pay off that debt, get that off your back. You don't have to worry about that. You always know that you have this house free and clear. It's an asset for you. So if you do get in trouble or lose your job and you need to sell it to get money in the meantime, you can do that. If you know money's coming in, take that money and invest it. Don't put it on the mortgage because you're paying 2.5%, 3%, which a lot of mortgages today are when they got them in the past. Now, the last 2 or 3 years, those rates have been 6, 7%. So, it's difficult to guarantee a 6 or 7% return when you go to invest. Right. But when you got 2.5, 3%, most professionals will tell you, I can beat that. Give me your money and I'll make you 5%, 7%. So you're in the plus side of things.
Yeah. And that's funny because you jump 5 to 7%, and that's what people are looking at. And then you talked about the CD rates being at 3%. But again, if you just have it sitting in regular savings, what are we earning? What are we earning as a regular retailer?
As a just basic savings, nothing.
Yeah.
At most zero. Like
Point
there's
0.001.
So you're not earning anything.
Yeah.
Let's talk about that real quick to give an understanding to our listeners out there of that gap between 2.5, 3% lending rates. Savings rates and 5 to 7% lending rates. Right. That's how banks operate on there. So when mortgage rates, lending rates are down in the 2.5, 3%, are you getting anything from your savings? Are you getting an interest rate? CDs? Are CDs paying 3%? No.
No, yeah.
No, because that's how the banks make money, and they have to profit, right? They borrow money at a certain rate. They lend it to you at a little bit higher rate. They make that margin. Okay.
Right.
They can't give you 5% on a CD if they're lending the money at 5% on a CD, right? Because then there is no profit there. They won't be in business, right? You won't have a bank to go to, right? Because most banks, are for-profit businesses.
Yeah.
Right? So
correct.
just kind of get an understanding of why when lending rates are high, CD rates, saving rates are going to be a little bit higher too, but there's going to be a gap in between there. As mortgage rates go, so we're all happy we're getting a 2.5, 3% mortgage rate, but then we're all mad because our savings isn't making any money. But that's kind of how the game's played.
Yeah, right. I like that 2.5 though. I ain't gonna lie.
Yeah, I would much rather have 2.5. And you can keep my savings interest.
Right.
Yeah, I'll take my mortgage at 2.5%.
That is
3%.
the determining factor. The other thing, let's talk about again. I've been looking, paying attention. During COVID, there was a lot of remote work. You can work from home, and what a lot of businesses found out. I mean, hey, they kind of cut overhead. Some people never came back because they knew they didn't need offices. But then there were some businesses, us, for instance, you could work from home, but then now they brought everybody back in. When you work from home, there is a certain amount of savings that is associated with that. But when you back in the office, and I've been seeing, and that's what a lot of people are talking about again. Now I've got that commute, and with high gas prices and things of that nature, it's cut in. To people's into people's pockets. So, do you know of any businesses? How do you guys handle working from home? Is that still an option? Is it not? Are there ways? Do they allow people to negotiate the work from home option?
Yeah. So speaking from where I'm at with Star, my job's very flexible. But when it comes to some of the other people that are typically in the office, like underwriters, customer service reps, things like that, for it. Yes, they are back in the office from COVID, but they've become a little bit more flexible to where we allow them to work from home a couple days a week, right? But want them in the office 3 days a week, hypothetically, right? I don't know the schedules that they all work on, but that's typically what you'll find is, yeah, we don't mind if you work from home a couple days, 3 days you're in the office, you pick whatever days you were. And usually it goes on teams. Whatever team you're on, that's the day that team is working from home, right? Unless there's a different thing. But I think the actual real question I'm going to toss back to you is, we found it more financially beneficial for the employee to stay home, right? Because their gas, overhead, lunch, all that stuff they're not spending. Going to assume that's more financially beneficial for the corporation or the business to have the employees too, because they don't less office space, less overhead, all that type of stuff. Why do you think a lot of businesses went back to having their employees back in the office or requiring them back in the office if it's financially beneficial for both parties?
I can speak for us because they've said it over and over, is the relationships, and where you actually you're seeing people face to face and you're having that camaraderie, and whether it's dealing with the customers personally, whether it's dealing with your coworkers personally, there is something to that. I think, I don't care how many Zoom meetings we have, and looking at somebody's head is not the same as when you walk in there and you can shake somebody's hand and you can talk and kind of get to know each other that way. So
I 100% agree on that standpoint also. And then I'll just add that I think a lot of business found out about how much time is being wasted, right? We're paying employees for 8-hour days, but they may not be working 8 hours when they're working at home.
You think so?
I know
our numbers, I thought, went up. Productivity went up, because I'm gonna tell you, when I work from home, I find myself working around the clock. You're right. You might throw a couple loads of laundry in, but you working. You sit in the bed, you working, because you find yourself not even getting dressed, and you get on your computer and work from the time you wake up. So
as a whole, you got the right employees. I think you can trust that. But I think what a lot of business found out, like, not everybody trust that, right?
I was gonna say, our numbers went up. Productivity kind of increased.
And that's my personal opinion. That's not speaking from any numbers from my bank or anything like that from it. But I think that's what a lot of businesses found and required employees starting to come back in there, is because they were finding a lot of dead time that wasn't being utilized that should have been.
Yeah. But I think too, another expense that we kind of left out, that's another thing that's climbing, is like childcare. So then you had people who were either, whether it was a single parent household or a 2-parent household. If you're a single parent, then you have the option to work from home, and then you save that money from childcare. Even if you're a 2-parent, if one of the parents is working from home, and the kids can stay home too. So I think there's a big chunk of money to be said that shifted when we brought back going back into the office, which I think was the best decision, but all those expenses kind of add up for people.
Yeah, great point about the childcare. Absolutely. Especially those that got used to not having that childcare bill during that time, or those that became first-time parents during that time that didn't realize or know what childcare expenses were. Now all of a sudden, what?
Yeah, exactly.
I'm so happy I'm past those days, but I know the feeling.
And the funny thing, not only childcare, I mean, a lot of that stuff has been cut. So childcare expenses, which were already expensive, have even increased more for folks. So, and it's funny that she brought it up, because, hey, when I was with the Housing Authority and during COVID, I used to conduct, financial literacy classes and things through Zoom, and that was it. I loved it because, folks that didn't have gas money to come to where you're at, and folks that didn't have childcare costs couldn't come to where you're at. Now, it's like, hey, we're right there in your living room. They can fix dinner, set the kid over on, on their iPad or whatnot, and they participated in the class. So it was a win-win.
I think that's one great thing that came out of COVID, was that ability through Teams calls and those type things, for ability for people to connect, and teaching school, right? Nowadays, we don't have to, prior to COVID, your kids miss school due to snow days. You only have so many snow days. Now we have to go and make up days, things like that. Nowadays, we really don't have any cancellations. We're doing it. We're just doing it at home. Remote learning nowadays for it, and there is no missed days, so we stay on schedule with it.
That's exactly right. Something else I wanted to touch on too. Again, current event, real life issues, is student loans. And I mentioned off air, and I'm not sure if you're aware of it, but June 1st, this was the deadline that if you had a student loan, if you're in a forbearance or deferment, whatever status your loan was in, you needed to call to get it changed. Otherwise, they're going to put it into whatever options they have for you as far as repayment. So when we talk about, again, somebody that's gotten approved for a loan and they may have been on an income-driven repayment plan, so that's the number that was counted, or something may have been in forbearance for X amount of years. All that has changed. This is, again, changing somebody's financial situation to deal with their current bills right now.
Hopefully they made that call. Right?
You're right.
Yeah.
Hopefully.
They made that call.
And like we said, a lot of people had you heard about that?
No, I didn't. Vaguely, but not like in depth. Yeah.
Yeah.
So then you got to think about the people who either heard about it or knew about it, but then still didn't take care of it or let that deadline pass.
Procrastinated.
Yeah.
Correct. Yeah. I sent it out to my network of people, letting them know, and I know a couple people made calls, and that's exactly right. They had them going from folks that were paying $50 a month. It's going to be $500 a month unless they got all this documentation in. Mm-hmm. And again, I deal in everything. I think back to, like I said, my borrowers, our borrowers that come to us, and I'm just like, man, these folks are going to get hit. So you buckle down and you kind of wait to see. But like you said, hopefully they made the call, or hopefully there's some relief, in the near future.
Yeah. I'm going to kick a question over to you for a second. Obviously, with the increase in cost and everything like that, are you seeing an uptick with those customers coming in retail-wise, asking for consolidation loans, personal unsecured loans, credit cards, things like that, to kind of help keep them afloat or consolidate the bills and things that they've accumulated over the last couple of years, maybe?
Yeah, I would say the last couple of years, mainly even to, I would say the last year. You seeing people come in again who just want credit cards or a small loan at max $5,000. So they're not asking for a lot. It's really just to kind of get by or get ahead. So a lot of the loans that they're, like I said, that are coming in, they're under 5,000, maybe 1,500, 25, are just like what they're doing maybe too is using a title, like a car that they own outright as collateral, just to get a little small personal loan.
Mm-hmm. So I would say that would probably, whether you know or not, but probably be indication on just trying to get by.
Yeah, exactly.
You're only
Yeah.
asking for $2,500, right? It's probably not a whole lot of debt you're consolidating. There's probably to pay some bills you're behind on.
Mm-hmm.
Right?
Which in a way is kind of smart. Like you're adding more debt, but at least they're not going after more than what they need.
Yep. Yeah, absolutely. Trying to. Do you see? It's been a while since I've been in the retail branches, but I remember, when people would struggle, they'd come in a lot of times talking about payday loans and things like that, or you would deal with customers that would be, that you would see having banking issues related to payday loans, because obviously they're getting a loan based upon their next paycheck. Their next paycheck, it's gone, but now they have other fees. Do you run into that very often? Is that still a big thing?
Not often. At least I haven't seen it. I do have a friend of mine who does work in like those payday loan areas and that kind of world. And I mean, she did say, as we were just talking and navigating things, she has seen those come about more, like where you have your seasons where they're not so needed or popular, but now you're starting to see more people utilize those resources as well.
Yeah. But I'm glad you brought that up, because that was another one of my points. They're going to start showing up on your bureau now. Some of those buy here, pay here. They're that's one of the new factions that have been put into place too. So that's something that people are gonna need to keep in mind.
In a positive and negative way, like they report positive payments you made and not just if you don't pay.
It's gonna show on your bureau. So I assume it'd be like any
line?
Yep, any other trade line. So but you think about the rates and the things and how they typically end. This could be.
That's interesting. Is that a government requirement for buy here, pay here's to report, or buy here, pay here's or wanting
be
to
government.
report?
That's something that
they're requiring them
correct
to report.
Correct.
Interesting.
Correct. Yeah. Correct. Other things coming down the pipeline, just again keeping people aware. I mentioned the tax cuts through the Job Act. A lot of those exemptions are coming to a close until something else is done, and that just lower individual tax rate, double standard deduction for 2026. So what $1,500 single, 30 for married. 90% of the people take the standard deduction. A $10,000 cap on the SALT. Double estate tax exemption, $14 million per person. The child tax credit that went from 1,000 to 2,000. Corporate tax rate slated from 35 to 21, and
So when you say the lower individual tax rate and like the corporate rate, you mentioned 35 to 21. It was lowered to 21. That's expiring and due to go back up.
it's expiring until now. Something has to be done. Yeah,
Yeah.
they'll have to vote on something different. But these are things that are just coming into effect. That like we said, people don't talk about it. Nobody, you don't know. So
are those expiring? Because I'm not in the know on those enough to speak on them. But are those expiring at the end of 26 or next
26,
tax season?
26,
So for income now. So when you go to
Correct.
file your taxes in 27, you'll still get those numbers based upon your 26 income, or no, 27 we're dealing with all new numbers.
you're gonna be dealing with new numbers, unless
okay.
unless they come together and vote on something different. And I would say, something's gonna get done. But again, we talked about the House Bill Act that didn't get passed, a bipartisan bill that came into place to address affordable housing. It didn't get signed by the president, but both parties that came together and worked on this, diligently. And to put it in perspective, it's a bill that would pump more money into local government. I think it's like $10 million that they pump into local government. Cut some of the red tape when it comes to stuff like environmental studies and things that goes into development. It was going to address investors and buying up properties and driving up prices. So they were going to put some limitations on corporate investors and things of that nature, and then also taking commercial buildings and making it easier for folks to convert commercial buildings into residential. Mm-hmm. So just something that, again, hopefully it gets signed or doesn't get vetoed, and just something that something has to happen. It's a 4 million home deficit in America, and then we know here just on the south side of town. If I remember, Southeast did their study. Want to say 20,000 home, whatnot, that deficit. So something has to take place to get people housed in the homes that are affordable. So
yeah, affordable is a key word there, because I think one of the things of that bill that stuck out to me, my little knowledge of it, was when you mentioned like the corporate investing, when you got, whether it's domestic or foreign corporations coming in and buying up real estate within our cities to ultimately build multi-unit properties, but then make it unaffordable for most people within those communities, right? They're going,
Correct.
right, jacking up the prices, trying to price gouge, in my opinion, for that stuff, and not really giving consideration to the communities that they're going in and buying up the property cheap, right? Because they're not going and buying the property expensive in certain neighborhoods. They're going and buying the property cheap, building new modern style housing, but ultimately price gouging because it's, for the multi-unit, right?
Yeah,
and
pushing people
make
out.
it difficult for people to remain in the communities that they've always been in.
Yeah.
Right.
Yeah. It's funny, and looking at that, I mean, I look and it's funny because Fort Wayne, I know, my hat's off. We're constantly doing different things and trying different things. So, the city is working with our local developers and folks to do different developments. Just like I was talking the other day to a group, they had a deal where they did a tiny home, a container home, an efficiency home, and a modular home. So, 4 different models just to see, what will work and at different pricings and things of that nature. So they have a, good idea and a good handle on that. Then they have what they call the lots of love, where they're giving people, discounted lots in certain parts of the city. So developers are taking advantage of that, utilizing these lots that the cities are giving them, and they don't have to pass on that cost to borrowers. So that's a way of for folks to save. And these are things that you have to be creative. And that's why I say when I looked at that bill, it fits that mold, because you have to do things, like I say, get real creative. And I use Fort Wayne. If somebody makes $45,000 to $50,000, can have great credit, and it's like, okay, how much home can they afford? What's their purchase price? That price range, they still can afford it. So without programs like these, without developers in the city making a conscious effort, actually, and lenders putting programs in place and products in place that can assist these folks, their dream of home ownership could never be. So,
or put regulations into play of not price gouging.
Yeah,
Those type of things. I mean, when you talk about even owning, it's even renting.
Yeah.
Right.
And I'm not even gonna say price gouging. It's not even price gouging all the time. It's the cost. It's everything that we talked about.
True,
People that's
true.
building homes.
Yeah.
I mean, the cost to build it now, they have no control over tariffs and the things that drive the cost. Fuel prices. So when somebody's building something, I can't knock somebody for wanting to make a profit. You're gonna have to get somebody again that's socially conscious, or there's somewhere they were able to cut a corner that they don't have to pass that cost on to the borrower.
Absolutely. Yeah. So, all right. Great conversation today. Do you have anything to add before we get out of here?
I do not. We got Mia.
Yep.
You got any parting shots, Mia?
Nope, I don't have anything.
No.
All right, we're good. You know what? Yeah, I don't have anything on the radar, so to speak, that I know that's coming down the pipeline. Next U-Sense is August.
Guys,
so,
are going to ask you on there if you have that date
it's
set.
going to be August. So, everybody have a safe, happy July 4th, 250, as everybody's calling it. So, hey, enjoy yourself.
Absolutely. So, well, thank you for tuning in to us today. Mia, thank you for being on the set.
Thanks.
Hopefully we'll have you back a little bit more here in the future.
We're going to make her a regular. She's gonna be
Regular.
Yes.
There we go. So, but to Jay's point, everybody have a happy and safe 4th of July, and we'll be back in 2 weeks with you. Until then, we are Our Neutral Voices. Peace.